Hi.
We're live.
Perfect. We are live. So this is an beautiful time that we are, where the whole world is speaking about challenges with the current assets and what they mean to an individual. It's no longer a question about the assets and governments, but it matters to every one of them as an individual and as a human, as a family. And this topic is hot, and it was always of interest for a lot of people around the world, especially larger investors. But now it's an every man's concern. And I'm very excited to be moderating this panel right now with amazing speakers with deep expertise in this space. So, as we jump onto the subject on real world assets and them getting on chain, what I like to do is to get a 30 seconds quick intro of every speaker to set a context of what your background is and why you're sharing and why you're on this panel. That context can help understand the value that you're going to be sharing here. So, why don't we start from you, Sarah?
Sure, thank you. I'm so happy to be here. Thank you, Key. My name is Sarah John Riley. I work at Republic Crypto. I'm one of the leads on our development. I primarily actually focus on crypto funds and raising capital for crypto funds, but I'm here because Republic is a leader in Republic Crypto is a leading crypto advisory firm. So we've primarily been advising crypto projects since 2017 on everything from raising seed capital to tokenomics to actually doing their token sale. So one of our key service offerings is a tokenization offering, and in the past year or so, this topic has become one of interest not just to traditional crypto projects but to enterprises broadly. So we're now focusing on sort of bringing issuers of all types on chain, and so I'm very pleased to be here on the panel today, and look forward to chatting with you guys.
Perfect. So, what about you, Christian?
Hello, my name is Christian Vallejo Schwarzenbach. I am the CEO of IBBA Group. Our company really focuses more on the fintech side. We work from remittances all the way throughout issuance, acquiring, offering custody and banking services as well. And we are also venturing into mining. So yeah, really glad to be here. And since we are also developing tokenization of real world assets through one of our systems and our derivatives, then we're very happy to contribute here.
Perfect. That's amazing. So, Sean.
Hi, I'm Sean Udin. I'm the COO of Fleamint. Fleamint is positioned as a Web 2 to 3 consultancy. We actually consult with a lot of Web 2 businesses how they can enter Web 3 on our platform and tokenize their real world assets, everything from real estate to sapphires. And yeah, I'm personally just a cryptophile and a techno guy. But I have a background in traditional finance, so this is of particular interest to me because I understand everybody in our audience today is traditional finance, and maybe not everybody is fully up to speed with what the power of blockchain can give to them. So I really hope we can help to evangelize this and increase the participation by doing these kind of panels.
That's perfect. Just a quick note on myself here. I'm Key from Key Difference. I've been in the space of blockchain for 10 years, and I've always looked for ways we can be crypto native and how the Web 2 world is moving to Web 3 and the value that it's going to create. So my journey had been on the fund side, running a fund. I've been incubating companies in the past, and right now a good portion of my interest lies on traditional companies tokenizing their assets of different kinds and moving on chain. So as you guys, as everyone in the audience, as you can see, the members here who are sharing their views are having deep expertise in the space. So you could see a million more people talking about things in Twitter, but we have guys from TradeFi, people who have done this and who are doing this, and this experience is super valuable. So stay tuned on every one of these questions, and I'm sure the value that you receive here is more authentic than what you can find anywhere else. So let's get started right away, guys. The first question, even before we dive on some of the specifics, is to understand what is the impact of on-chain assets on traditional investment portfolios. So Who would like to go first?
Oh, well, if I may. Um,
Perfect.
well, the impact is more on the part of diversification. So it's more diverse, um, and it's less risky for the investor. So that's the most important part. When you are going on the tokenization way, for example, there's a famous token in Argentina where we have our headquarters. That it's called agro token. So what they're doing is they're tokenizing um, the crops and all of the industrialization process until the end product. And that is creating new ways to get liquidity for the farmer and for the whole industry as the industry as a whole. I'm talking about corn. I'm talking about soy, um, from Brazil, from Argentina, not only Argentina, and that creates opportunities as well. But from the family office standpoint of view, or the investor or the VC, well, it reduces the risk quite substantially because you don't have to go into, I don't know, literally a green field and start from scratch. So you already have an ongoing production. You're only committing to the end product, and if you have interest in that industry or in that area, then you just go in and purchase that token or a bag of tokens or whatever, what have you, and it just makes it easier and faster, and it reduces the risk quite substantially. So it makes for a real world application, and a quite interesting one for any investor. So that would be my take on it.
That's perfect.
I can jump in there. I think Christian brings up a great point that you can basically bring investments to investors that didn't exist before. You can introduce new types of utility, but I think an important point to highlight is that even just traditional, this is a far superior system for a number of reasons for just traditional. I mean, for private assets, for instance, this is a massive this is a massive opportunity. I mean, there's a BCG report that said that they think that global private assets, whether it's private equity or private debt, that come on chain, it's estimated to be about 16 trillion by 2030. So that's around like 10% of GDP at that time. And these traditional assets, like the existing infrastructure for both funding these deals, settling these deals, and if there's a transfer or a secondary trade, all of these are massively slow, not transparent, prone to issues. I mean, I worked in private debt before moving into crypto a year or so ago, and just trying to find wires that didn't come in. It takes days to find those for those wires to hit, and then you're trying to find them, and then you're trying to prorate interest payments. Here, settlement is instantaneous. You can build in, automatic utility into tokens. And so, for instance, if you have a deal where there's for a lockup, you can program into the tokens that there is no transferability for a year or however long the lockup period is. So I would just highlight that, for family offices who are kind of thinking if this is a whole new asset class, I think this is also a new technology and essentially a new back end for traditional asset classes, aside from sort of there's also as we touched on, the ability to introduce new utility, or bring online new investments, but it's also a massive opportunity for the existing private, especially private world.
That's
I
amazing.
have to wholeheartedly agree with that, because you have to remember as well that the crypto markets are 24/7, okay, and smart contracts are smart, and the paradigm shift for traditional finance people is the same or akin to imagining brokers waving bits of paper around on a crowded trading floor,
Right.
and then everything went digital. Well, this is the next iteration of that experience and the evolution of the way finance works, and that's having everything coded, everything transparent, everything on a immutable ledger. Absolutely crucial. There is no tampering with the documentation. There is no way to intercept or interact with anything outside of the parameters of the contracts. Contract code is law. That's the phrase we have as crypto people. And one thing I'd like to bring into this as well is, from the viewpoint of the crypto world, I think a lot of traditional finance people will have looked at volatility, for example, in cryptocurrency trading, and will have looked at a lot of, let's face it, quite unstable and no substance behind them projects. Okay, And one of the essential parts of mass adoption and crypto growing up out of this adolescent phase that we've had for the last 10 years or so, right? Is to actually embrace traditional finance and not to fight it, but add decentralization, add democratization, add larger liquidity pools to the traditional finance world. And this is something that wasn't accessible previously. And whilst tomorrow there's a regulatory panel, by the way, I strongly suggest everyone comes along. Whilst there's been some regulatory uncertainty, of course, people are a little bit unsure about adopting this. But there are ways to do this. Essentially speaking, tokenization is really digitizing the contracts that you would normally see on paper. So the paradigm shift is really very, very similar to moving to e-signing a PDF. It's just in another iteration and a better way of doing it. I think one of the comments in the public chat a little while ago, somebody mentioned that the tech is, there's a lot of assumed knowledge here. If we really boil it down, it's what you do already. Everybody out there, you are already doing these kind of trades already. It's making it simpler and it's adding the technology to it to make it faster, simpler, more efficient.
That's fantastic. Christian, I have something. Yeah, go ahead.
Pardon. No, go ahead.
Okay, I have something very specific for you, because when you mentioned about it, you referred to it as a form of diversification. Whereas Sean mentions that it is a technology uplift on something that is already there, because real world assets already exist. You could go buy right now, or it is the same thing, but it's in a better form. Like Sarah John mentioned, it's tokenized, it's easy to move, all the benefits. It's an upgrade to an existing class of asset. So how would you see this as a diversification? Is it just because it's on chain? Is there an extra risk diversification there? Or would you just mean that this is giving access to special assets which they could not have access because of geo or political reasons in the past? Like, what is your perspective there?
Yes, accessibility is one of the main factors. I mean, if we go back to the basics, the whole idea behind it is to allow access to this sort of assets to the general public. Somebody in, I don't know, Mumbai can purchase an Apple stock, a tokenized Apple stock, even if he doesn't have a brokerage account, just with a wallet. It is something as simple as that. But not. I'll go back to tokenization, but I just want to circle back a bit. It's not only the asset, but also the process. That's what makes it so interesting. So, for example, let's take a company, I don't know if you're aware of, Kasha Gold. What they do is, well, they have tokenized gold, actually, gold bullion. And in their process and in their smart contracts, and even they have their own Explorer, which is beautiful. But you can also see the entire process ever since where it came from, how it went through, who has it, in what warehouse it is, and all of that is contained in the blockchain, and all of that is contained in the smart contract, which it's not only the asset per se, because of course then you can tokenize that asset, that gold bullion, and just I don't know, fraction it into smaller pieces and then sell it to somebody that is interested into investing into gold. But also the entire process, it's fully transparent, and the word that I love about this industry is trustless. So everything is trustless and frictionless as well. So you can go into the blockchain, you can go into that Explorer, and you can see the entire process of that asset, how it came to be, where is it currently under which custody, who has it, and it also comes with pictures and everything else. It's super complete and super transparent. Now, going back to diversification, yes, of course. If you are into renewables, so we are also into renewables as well, and you are investing into renewables. Let's say you're into windmills, for example, or windmill farms or whatever, and then you're interested into also expanding your portfolio of renewables, and then you're looking into lithium. So there's several projects there. So it's a very easy way to diversify without having to take the whole risk and the whole way journey going to a mine in the middle of nowhere and going through the whole process. That's what I meant when I said diversification for the investor.
Thank you so much for that.
Let me.
Yes, sir.
Yeah, I can add to that to just highlight sort of I think the theme that we're trying to highlight here is, aside from upgrading existing systems for existing markets, essentially, or existing real world assets, you can bring investors investment opportunities that did not exist before, or utility that did not exist before. So, for instance, our Republic Crypto's parent company, Republic, is one of the largest crowdfunding platforms globally. So it's a platform where startups can raise capital directly from retail investors, and so it's essentially their biggest fans or can become investors in Republic projects. We're soon tokenizing all of this, the equity that we offer through our platform. And so what this introduces is, a startup that has now, let's say 5,000 retail investors through our platform. In the existing model, you're just sort of holding this, their equity and hoping that they have a unicorn exit down the line or an IPO at some point. By introducing the tokenized aspect to these private, venture deals, essentially for retail holders, now you can, for almost zero cost, these startup companies can pay dividends to, even if it's like a $10 dividend. I mean, that would have been completely cost prohibitive under the existing model, but now it's essentially zero cost to just, send $10 to all 5,000 of your equity holders. One really innovative, I think, kind of first of its kind tokenization project that Republic just did was we essentially tokenized part of ourselves. So we, I don't know if you guys have read about the Republic Note, but it's a really modern, innovative financial instrument that Republic just launched, and we've closed part of it. So Republic's a private company. We're primarily venture owned, but we issued a revenue sharing digital security. We have a platform of millions of users who are venture, who invest in venture through us. We have obviously thousands of companies who have raised through us. We have this large, community of startups. So we've issued a digital revenue sharing security, the Republic Note. Every time one of the positions that is either held in our retail platform or in our capital has a big exit, a certain percentage of proceeds of that accrue to a dividend pool. And so and then once that pool reaches certain thresholds, it's distributed as dividends to the holders of the Republic Note. And then beyond just like a dividend distributing mechanism, this note will gate access for its holders to a number of things on our platform, from like discounts to making new investments to whitelisting certain offerings to giving you access to private events. So this is just one example of something that we've done where you can create, through tokenization, you can create value to your platform, your community, your users, in a very innovative way. And you can also provide a lot of value through tokenization to, for instance, startups where they couldn't interact with their startup or with their retail investors before because it was too cost prohibitive. But now they can kind of have direct access to them through their token. So anyway, there's just sort of new utility that can be introduced is really exciting.
That's really nice because as you mentioned, one of the things that you emphasized is giving people access to things that they couldn't access before. When I talk about real world asset tokenization, the thing that I feel is like, now we talk about our net worth in like, I have $10 million of $10 million worth, but tomorrow you talk about, I have 5 kgs of gold, 3 tons of timber, and gallons of oil. That's your portfolio. That's commodity. That's true. It's not fake money printed by a government, but it's real and backed by something that there is an inherent value to. That really excites me. It gives me goosebumps whenever I think about the future of how our net worth is going to be. I have an interest. I think this is an important point to emphasize. Sarah, I think this question is also for you here. Because you have the background, both you and Sean, you have the you mentioned about your backgrounds on the trade fi and so on. I'm keen to understand where you see the size of this market, the overall market size, because the moment we think about derivatives, and if they go on chain, let's forget about even commodities and assets, but when derivatives go on chain, we are looking at a massive market way beyond the $16 trillion that was reported. So I'm curious to hear about the size of the opportunity, and if every one of you can share one example that you're passionate about, one example that inspires you about a new possibility, not just another example that's similar to the other, but something that's unique, that'll be really great.
Cool.
Let's
You
start
want
with
to
the
go
show.
first, Sarah?
Sure. Sean, go ahead. Sure, go ahead.
Oh, okay, thanks. So this is the lowest hanging fruit of all, and that's simply real estate. I have a passion for it. My background in TradFi was actually in mortgage lending, and one of the biggest issues living through the 2008 global financial crisis was the issue of having to trust third parties to rate mortgage books, and how that led to such devastation really throughout the financial system. That can't really happen with transparent blockchain technology, right? So there's no obfuscating what is a toxic debt or what is not a good debt. It's very clear the accounting is there on chain for anybody to look at who wants to. So anybody trying to hide that kind of thing is going to get into trouble. And a little thing I would say is the size of the market is not really defined by little sections, because everything will be tokenized in our lifetime. There will
Absolutely.
not be any off-chain assets. Once mass adoption hits, there is no reason to try and squirrel away and hide something that's not on-chain. CBDCs are coming. Central bank digital currencies are coming. The only way they're going to be inherently effective is as nations tokenize their land registries, as they tokenize all of the assets that the actual nations have, to make it worth them using the CBDCs to interact with those kind of resources. So the reality is the world and the entire global economy will be tokenized. Having said that, in real estate, to give you an actual off-the-cuff example, Fleetman is a startup. I said we're positioned as Web 2 to 3 consultants, but this is to bring people into our platform, which we believe will be the first super DApp. That is the super decentralized application. So we have a DEX, we have a marketplace, we do the consultancy, we do the venture. I love what Republic does. We need to talk later, Sarah. And our venture arm, we're actually aiming at quite established brands who want to get into Web3, who don't understand Web3. So that's where the consultancy part comes in. At the moment, we're not doing a huge amount of startups. But on the real estate side alone, just from the first 3 deals we did, we had over $600 million worth of real estate come in within 2 months to be listed on the platform. From that, we've also got fractional product that we can put out that literally, quadruples or more the value of those particular things that have come on. So the issue is jurisdictions, and this is where it does get problematic. Not every jurisdiction is ready to do full tokenization. So, for example, with our offerings within Indonesia, which is where a couple of the agents are based, we can only do about 10% of the transaction on chain. We can do the deposit part, we can do the promise to buy part, but there is still laws that require a face-to-face in front of a notary public to actually do the witnessing of a signature on a piece of paper, or somebody has to fax a power of attorney. It's complicated for foreign nationals to invest, but we've saved 30 to 90 days from the transaction time. So we'll only do something and bring it onto chain if we add value. We have other stuff, but you want to get unique examples from everyone. So I'll let Sarah talk about other assets. But that was within 2 months. It was literally drop of a hat. People wanted to put stuff on chain. There's a market from crypto people to buy real world assets, and as more and more real world assets got on chain, then it's inevitable that people who are not in crypto will start using digital currency of at least central bank format to interact with digital products.
That's right, Sean. I think that as you were speaking, I was just thinking about, you're sort of bringing what you can on chain. There's still stuff to do in person. I think that's where that's a story of where tokenization is in a large part right now, that all of us are sort of trying to figure out, okay, what part of this can be tokenized, or what part of the process can, even as I was speaking about sort of my former career in private debt, you have to get the custodians to be able to accept digital securities. You have to, you have to get the investors, you have to get the issuers to all be set up with wallets. So kind of to the family office audience here, I think this is sort of an interesting theme for you to think about, because you want to start thinking about what kind of wallets or infrastructure you want to have in order to be ready to participate in tokenized deals. Ask your custodians if they are accepting, digital assets. Because all of us will have to have some sort of infrastructure or be engaged with platforms that allow you to engage with digital assets. So, all of the various pieces are being addressed. I know Block Tower has sort of addressed this in an interesting way with sort of bringing some treasury assets on chain. What we're really excited about is when we bring all of our startups on chain soon. We're sort of working through our beta now, but when all of our startup deals are tokenized, we'll be able to introduce, once we have the proper licensing, a secondary marketplace that didn't exist before. Within our KYC ecosystem. So we're on our Republic side, we're working within U.S. regulations, which all of us are kind of dealing with our regulations in separate jurisdictions, but we will be able to retail investors who are investing in a startup, instead of just waiting for that big IPO or that big exit, you'll be able to trade your token interest on a secondary exchange, and then other utility comes from there. I mean, you'll be able to hopefully eventually, you post your interest in a small, in real estate as collateral for something else. So that opens up, as again, as Key you mentioned, derivatives and other use cases. So we're all sort of in different stages of bringing everything on chain, but I agree with Sean that in the future everything will be on chain. We will all demand it. This will take out a lot of sort of the transfer agents and sort of the a lot of the intermediaries, but I think eventually every institutional and retail investor will demand full transparency for their supply chains, for their investments. You want to understand where everything is held. As Christian mentioned, where is my gold held? Not just, I'll just buy like a gold ETF. You want to say, okay, what facility is my gold being held in? So we're moving towards this, but I think that there's some very valuable utilities that are introduced for investors, like being able to trade on the secondary market, like eventually being able to use investments that you weren't able to post as collateral that will be able to be posted as collateral. It'll just generally sort of broaden the investment pool for all investors, as well as broaden your ability to sort of leverage your wealth in very new and meaningful ways.
Also, if I may, quite quickly, well, a couple of things. When you mentioned about the size, I don't think it's quantifiable right now, because as what Sean just mentioned, and what we can read and we can see in everyday news, everything is going into the blockchain regardless. So we're talking about government issue, currency, if you will. It's very difficult to state that, but yeah, let's assume that that's a currency. But yeah, it is a currency. So all the way from the way that we invest, how we invest, and how we trade, it will be tokenized in one sort of way or another. It doesn't matter. So yeah, 16 trillion or 400, it does not matter, because everything will be tokenized in one way or the other. Going back to transparency, for example, for VCs, we have an investment division, and it also brings transparency on the process on how you invest in a company. So if you're investing in a very small startup or a regular size startup, and you have them fully tokenized, and you have them all in the blockchain, there's no guessing, no guesswork on how they're operating, what are their financials, how good are the numbers or not. So it's easier, it's super fast. So we don't have to go through 2 months or 1 month of due diligence. We have had a couple of investments on very small startups that were fully tokenized and on the blockchain, and all of the information was like ready available, and that made it super easy. So it's very easy to work that way, and that is the future. That is what's coming for small startups, for bigger projects. If they're fully on the blockchain, from their financials to their product line, their production process, and so on and so forth, it's super easy. So you just present it as a very simple deck. Go into this and just look at it, and everything is in there. You can have it a fully displayed Explorer or something quite simpler, but then it's super easy. So you don't have to go through all of the process. And circling back to an example, we decided to provide a product that it's called it's an NFT based bond with coupon. And that is what we did for one of our mining operations. So we are launching next month the first NFT that provides dividends as a coupon, which is an actual bond. So it's a bond instrument that we are tokenizing in a way, and then giving it that spin of an NFT to make it sexier for the young market. But in the end, it's the same thing. And you are issuing a bond that provides dividends on a daily basis, and everything is trustless. So everything's automatic. You don't have to do anything else. Once you bought it, you buy it for $1,000, and it will give you dividends up until when the farm just stops producing, which might be in 10 years or 12 or whatever. And that's quite interesting because you are giving access to people that they didn't have that option before, but also you're creating an instrument that it didn't exist before. And that's what's beautiful about this market.
Yeah, I love that, Christian. It's a great concept, and I think it's a lot of it is sorry to jump in on this, but a lot of it is democratizing finance and giving access to people who can't even access a family office, right? But it doesn't mean that intermediaries will be totally phased out, because what's going to happen is the crypto movement, or let's say the cryptocurrency and blockchain movement, is about giving the user or the customer or the investor a stake and a participation within the business's operation. So what you're doing is you're engendering a brand loyalty, which would normally be for a fashion item or for a band or for whatever is pop culture, but actually it's for an investment product. And this is already happening in decentralized finance right now amongst the early adopters. They have cults. They have armies of people that will support a token to zero. They don't care, they will follow it, okay? And those kind of people are actually the seed of the way finance is going to be transformed towards, because people will actually take time to look at their portfolio, who are actually going to their, I'm from England, Greg's, which is like a pie shop, and they'll be going out for their lunch or whatever, and they'll have a little look on their app and they'll see what their portfolio is doing, because they've managed to get access to something that they never had before. Or, I mean, one of our clients is based in Kenya. There could be a farmer there that buys a piece of a £3 million project in the UK. And they're going to be looking at that, and they're going to feel a sense of empowerment. And because of that, they have a degree of loyalty. So the intermediary still has to exist to marshal that relationship. And they're still going to earn for creating and engendering that relationship. But it's going to be more about that kind of interpersonal culture creation and less about the legalese of brokering Form A, whatever it is, because nobody else knows what that form is. That's how this kind of finance is going to evolve. And obviously, family offices have got pools of liquidity that other people don't have, which means they're going to come with more bargaining power with the people that they're investing in, and actually have more say about what that company does that is effective. And the companies are going to listen because they know they have to keep their investors happy, because they can see what's going on directly. And actually, the user, customer, investor is going to get a better product because companies have to do better by them. So it's actually going to improve everything. There are so many knock-on ancillary benefits. And it's not just real world assets, it's absolutely everything that gets tokenized, right? Is going to have to improve its offering to deliver on what it says it does, because there are far too many people involved to see what they're doing. And, and there's not going to be a chance for somebody to like raise money and go off on a yacht and do nothing about the job that they're trying to do. They're going to actually have to deliver. And I think that's a wonderful thing. And I think it's something that family offices are going to be very well positioned to take advantage of, to be able to actually use that form of investment and that form of transparency to improve the yields that they're getting for their clients.
That's fantastic. So we spoke about a lot of different points here about the size of the market, which is huge, and the benefits of it. But I'd like to understand what are the challenges that we need to cross to get there. But let's not talk about regulation. We all know that, so it's a much spoken about. And Sir John also mentioned about custodianship and issues related to that. But anything more, especially those that are lower hanging fruits that we could tap in the shortest period of time. Why don't we start with you, Sir John?
With we're exploring sort of we're doing experiments or public in a wide range of industries, from film and music to exploring natural gas projects. We're exploring and then sort of traditional private debt that we're speaking to as well. We're looking at a number of sectors, and each one sort of has its own challenges. It's a lot of it is sort of the chicken and the egg problem, like which investors are you distributing to if investors don't have crypto wallets set up? If the issuers are, if the issuers are sort of traditional companies that are set up with a back office that is just handling wires and a lot of paperwork, what is going to be the impetus to, have them sort of reform their back office policies? I think the way that I've been thinking about it in terms of the issuer side and sort of thinking about how to, have them bring deals to market that are tokenized deals. It's just there's such a value proposition to offer that one solution that we've come up with that we're going to have a press release out soon about is just you're able to, instead of having so much of the burden be on the legal side, that you can have so much just programmed into digital securities. And so we're going to have a press release coming out soon about a new version of a digital security token standard. Right now, ERC 1404 is a standard that currently exists, and our team has been working to enhance 1404 to work in retail private securities for primary and secondary sales. So it's essentially an enhanced collection of smart contracts that work together that'll be able to manage. If you're an issuer coming on, we can manage on-chain and enforce it in the tokenized contract swappability. If the issuer wants to be able to have the holders exchange and swap these instruments, transfer restrictions up to certain periods or between, if you're a US accredited investor and these deals can't be sold to retail investors, that'll be programmed in, aligned with, KYC wallets that it's interacting with. So essentially, I think the theme is that programmability will be able to ensure that there are fewer ways that issuers and investors can act in an illegal manner, or it'll reduce errors, not even in a legal manner, or illegal actions. So basically, that these instruments can work at full scale without a lot of human intervention. So I actually think that should take the burden off of both issuers who, for instance, in the private debt markets where I used to work, if someone wanted to make a trade on a secondary market, in order for that to become effective, you would have to go back to the issuer, get the issuer to KYC and approve the new investor, get their whole back office to re-register everything. This can just be done automatically to pre-KYC'd wallets. So then I think on the, for family office investors, there won't be errors. You'll be able to see just you'll be able to ensure that all terms are programmed in the contract, that nobody else investing in this deal can do anything outside of the agreed upon parameters. So that is one area that we see as taking away some of the frictions, is just having new security token standards where you're able to program almost all of the deal terms into the security itself.
That's amazing.
Also, one of the challenges that I believe that we're currently facing, it is just a transitional problem, which is that big and large family offices that are sophisticated, they do have their blockchain division, and they can, of course, trade within the blockchain without a problem. But also, there are very old family offices in Latin America where we operate that they don't believe in blockchain. They don't understand it. They don't want to look at it up until now. So there's a bridging that is going to happen between now and the next 10 years. A company like ours, that's also something that we have and we do. We believe in bridging all of that, the two worlds together. But yeah, it's difficult for a family office to come in and say, okay, well, I like what you're selling, but how do I get it? I have, I don't know, X amount of dollars in the bank and I want to invest, but I can't because I don't know how to. And that's where companies like ours come in as well. And we offer that service because we need to bridge that gap as soon as possible. And although in 10 years that will happen, right now you need to go to those companies. But that's a very minor challenge. I think that the biggest challenge is it's about jurisdiction and how the blockchain is viewed in some countries, how is it possible to operate in those countries? For example, in only 3 countries in the whole Latin American landscape, you can operate blockchain-based assets. In others, you can't, or there's no law about it. So that is something that it's the major problem, at least in our countries. But apart from that, then you have the technology aspect and adoption, and that's why we have a bridging companies like ours to help with that as well. Sean.
Yeah, I agree with you. And it's actually, our standpoint is that mass adoption, but that does include technical mass adoption amongst institutional investors as well. So, I mean, all I can say is from our point of view in our platform, our wallet, access to the platform is KYC only. Then the wallet is integrated and the whole system is being designed to be a mobile app, as simple as Robinhood or any other banking interface that you would use, or even your Grab or Uber. I mean, it's literally make it familiar. Now, early adoption is amongst geeky people like me, and I assume most of us in the panel have a technological bent. And we're interested and we're willing to download an extension and input a RPC network and change chains and all this kind of stuff. That's not going to work for mass adoption, okay? And the businesses that know that and understand, I mean, we haven't even touched on chains here, right? I mean, we are going to be in a multi-chain future. There will not be one chain to rule them all. That means effective bridging. It means effective cross-chain interoperability, and lots of geeky, long, unnecessary words that people don't want to hear because that hinders mass adoption. They want to click on a button and know that it works. And if I click on Real or USD or Singapore dollars and the transaction goes through, fantastic, it's done. And the thing is, smart contracts actually allow us to do that. We can display the price in whatever currency you want. The conversion can occur through our DEX. It goes through, bada bing, bada boom. The person who's vending gets it at what they want, and you bought it at what you wanted. But the price is obviously real-time converted. It's got to be simple. And that is the biggest challenge facing every crypto company, is making it simple enough and palatable enough for everybody else who doesn't do crypto.
That's great. So here's something that I think we need to also shed light on in this process. We spoke about the benefits and all these great things, but I'm sure with any good thing, there's also some risks involved. So one thing I could think about is a lot of lost assets lost into unknown wallets, and of course there are recovery mechanisms and so on. But definitely there's something going to be lost here, which has real value sitting in a custodianship, and it's occupying space and cost and so on. So I'd like to understand, considering we have only 6 minutes left, if every one of you in 2 minutes or under can share what are the risks that you see that might have gone unnoticed, and if you have any ideas or thoughts on how that can be resolved.
Well,
Let's start.
I'll go from my.
Okay,
Sorry,
perfect. Yeah.
just to say that I think it's not the loss, because that's human error, okay? And our wallet is recoverable anyway because it's tied to KYC, so we can reset keys. But it is self-custody. We don't really do custody ourselves. That would be a third party should we bring one in later. But the principle, I think, is the issue, is the trust in the asset that is being tokenized really being the asset. That's the key facet. So you have to be going to entities that are, like, for example, in crypto right now, you could be buying something from Monkey Face 1922, and that guy's a billionaire and he's got multiple $billion in under his management, right? His total value locked. It's insane, but that's how the crypto world works. What's going to be appealing to family offices is dealing with people like Christian, Sarah, John, myself, you. We have real faces, we have real names, we have real business track records. You can go and find out who we all are. We are doxed, that's the term. And the businesses we do business with do due diligence on everybody in the company and what we're doing. And in turn, our companies will do that due diligence on the companies that we are listing for soliciting investment or creating a novel DeFi ideation for them. So that trust is absolutely crucial, because that's the one part, that's the human part that is the problem. The code is the code. No one's hacked a blockchain yet. They've hacked the interoperable bits. They've hacked other things that people have leaked passwords for. But actually cracking the cryptography of the blockchain has not been done and will not be done for, I think projections are over 100 years. And that's once we get quantum computing to a certain level. So the reality is we're not cracking any blockchains anytime soon. So it's human error. And that human error exists in every single transaction you do today. The key facet is, are you going to have the same standards of proof, the same standards of verification when entering into a crypto deal or entering into a blockchain deal as you would in a real deal? Well, obviously, the family offices here will do that. So I would say the risk is no different from interacting in any investment deal with any other family office investment that they choose to do, because you're still going to have to make sure that the people are correct, the things that they're saying are correct, and the business plan and so on, all the elements that you're going to look at to make sure that you're getting the best yield for your client. But there isn't really an additional risk because the technology is actually safer than writing on a bit of paper.
That's exactly
Christian?
right. I think where we are in this market is sort of I think crypto has what's been tokenized thus far are for the most part, aside from stable coins, which are tokenized commodities, mostly the U.S. dollar. For the most part, we've had everything that's tokenized is sort of our crypto assets, really. And in the recent year, and why this panel was so interesting, is I think crypto needs real world assets to come online, and the real world assets stand to benefit enormously from this technology, all parties involved. But as Sean mentioned, there does need to continue to be this trust component. I think there is a role for institutions to play. I think there'll be a big role for marketplaces to play, sort of trusted KYC marketplaces. So there's a tension in crypto between having everything decentralized, having everyone be able to participate, and the reality of regulations and laws where financial institutions can only deal with KYC parties. They can't really participate in just pure decentralized finance because they would be breaking laws. For instance, you don't know if everyone's been KYC'd and you're dealing with North Korea on the blockchain. So I think what we're focused on is creating a KYC'd marketplace for any private assets that you can think of, where everyone, no matter where you're from, your wallet, we know who you are, what type of investor you are, and similarly, we have a platform where you trust that the deals that we're bringing are fully vetted deals. We've provided all the documentation that we sort of verified these deals that they are real. The horror stories that people hear about crypto is you sort of clicking to agree on a transaction in your wallet, but no one right now, the user interfaces of wallets, it's like they're just these long addresses, so you don't really know what you're agreeing to. People mistakenly agree to accept or execute transactions that were not easily verifiable, or they didn't really know what they were agreeing to, because it's just sort of long pieces of code. So as Sean mentioned, the user interface, the marketplace, all of that needs to be kind of brought to it needs to be a much better UI user interface for both institutions and individuals to manage, so they know what they're buying, they know what they're agreeing to. So we hear a lot about sort of wallet infrastructure that's being built right now. I think this is a big focus of the crypto industry, because we know that for the institutions to come in, that you need to be able to participate, number one, in KYC marketplaces, and number two, you need to be able to actually use the technology and know what's in your wallet, know what you're agreeing to, know the transaction terms, and who your counterparties are.
Also, something very important regarding the risk behind it is, what is the underlying asset? So that's also a problem. And since we're talking about tokenization of real world assets, what is the underlying asset that you're tokenizing? And in the end, I don't believe that the blockchain space or industry is riskier than anything else, or for that matter. It just requires a bit of common sense, as Sean just mentioned. I mean, where you're dealing with an anonymous person on the other side of the world that could be, as Sarah mentioned, in North Korea, actually, then it's going to be quite difficult to guarantee that is going to be a smooth operation. So you need to look at what is the underlying asset. What is that token based on? What is it tokenized on behalf of? I mean, if we're talking about gold, okay, where is the gold? If that's real gold, or is it just a promissory note that somebody's going to mine that gold, and that creates a different classification of that token. And although we don't have I don't know, Moody's or Standard and Poor's that could actually define the quality of that token, it goes down to common sense. So that's something that it's very important. And regarding security, I think that it's super secure. It depends again on how you're dealing and who you're dealing with. So as Sean mentioned, it's just a matter of going through the proper companies and doing your very simple due diligence, and that's what this market is for. That's pretty much it.
This has been an amazing session with a lot of interesting information. I mean, I think we can go on and on for even a few more hours on this topic because, I mean, my mind is blowing up about so many possibilities on things, but I think that's for another day. It was a great conversation. And Sarah John, you have some people asking questions about Republic in the chat. You can reply to them offline, I guess. But thank you so much for all the speakers here, and let the real world assets grow, and we're all here to benefit from it. Thank you so much.
Thank you, everyone. You guys had a great session. Very
Thank
much
you.
appreciate for your time, and have a great day.
Thanks so much.
We'll be back shortly in a few minutes with the privacy panel. So everyone in the audience, please stay tuned.